You're such an asshole.
Hey everybody, the old captain here. Have quite an interesting request. Had to crunch a little bit of numbers for this, and it's in the realm of financial planning and retirement. Hello, asshole. I've read and enjoyed your books, Enjoy the Decline in Bachelor Pad Economics. I've recently ran across two blogs, Early Retirement Extreme and Mr. Money Mustache. They advocate saving 80% of one's income to invest, mostly in index funds like Betterment and Vanguard, and live on the remaining 20% while the dividends build to cover one's living expenses. It sounds appealing on the front end, but I'm too pessimistic and jaded to believe it could work for the average person, and as I'll likely never be able to save the amount needed to live such a way. Please share your thoughts on this type of lifestyle in a video response. Thanks, and keep on being an asshole, Keith. Well, thank you, Keith. Now, I am not besmirching at all Mr. Money Mustache or the guy who writes Early Retirement Extreme. Matter of fact, I've linked to both of them, and I like their work. But with these numbers, and I would love it if they came on and provide their own figures. I'm just going to do I did a couple, not even scenarios, but I plugged in some variables and ran a scenario. And the short answer is it is possible to do this, but where I have an issue is the saving of 80%, because as you know, I'm a minimalist, or I was one, and now the dividends have paid off. It actually has paid off. So what I did is I put together some figures for the average person like the client wanted, assuming you save 80%, and you live off of the remaining 20%, and then combine it with some things I knew about minimalism, my own budgeting, and personal life. All right, so we have to assume a couple things. The future income is going to come from dividend payments in an index fund, the S&P 500 index fund, whether it's invested through Vanguard or Betterment, doesn't matter. We got the S&P 500. So the S&P 500 dividend yield right now is at 2%. Okay, so if you invest $100 in an index fund, every year you'll get a $2 check in dividends. We're not even worrying about taxes on that yet. All right. So it used to be much more. It used to be about 5% on average, but it's come down because all the baby boomer money and 401k money and IRA money has driven prices up. So you got to spend a lot more money, almost 2.5 times the price that you used to get that same dollar in dividend income as is today. So that's one thing that's going against this, is I'll just throw it into the market. Well, the market is pretty overpriced. You're only getting a 2% rate of return, and we haven't even talked about inflation yet either. So, but let's assume no inflation for shits and giggles. Right? Now, for the average person, the median household income in the United States is roughly $44,000, $43,640. But then you're not going to save 80% of that, because guess what? You got to pay taxes, bitch. All right, and your average taxes turn out to be about $12,000. I only took payroll taxes and suda fuda woulda coulda huda Social Security, Medicaid, and I took half of the Social Security because the employer pays the other half to come up with that number, because this is your take-home pay. And that leaves you with roughly $31,000. Okay, so the average person is making $31,000 take-home pay. And now you got to live off the rest of that. And people are saying, what about sales tax and all that? Yeah, that's paid with your take-home pay and then included in the cost of living. Now, $31,000 for median after-tax income. And I had to look up in my book, Enjoy the Decline, what was the minimalist budget that I had, and that was like several years ago. So it was $13,000 then. Let's just assume with inflation it's $14,000 now. So you take $14,000 away from your median tax or median after-tax income, that leaves you with $17,000 to invest. Now here's where I would disagree with this 80-20 assumption. This has got to be an extreme form of minimalism. I mean, you could be living on a buddy's couch for free. That would definitely bring it down. But if you are going to take and live off of only 20% of the after-tax income, 20% of $31,000 is $6,200. Now, is there a way to go that extreme? Yes, I'm sure there is, but you're not going to have internet. I mean, you're not going to, and you're going to be living in Nowheresville, North Dakota. You're starting to get to the point where it's no longer economic or efficient, and it's starting to cost you other things like social life. It's actually maybe even costing you money because you don't have a cell phone and you don't have internet access, so you can't apply for jobs. So you're starting to lose some efficiencies here if you're going to this extreme level of minimalism and frugality. Of course, please, gentlemen, come on, I'd love to see the statistics and the figures on it. But I am going to stick with my personal experience of what it takes minimally to live And that is, in today's world, one person needs $14,000 in after-tax income to live, thereby leaving you with, assuming you make the median income, $17,000 a year that you could throw into an S&P 500. Now, let's just assume you start doing your saving at 20. Could be earlier, I know. Let's just say 20. And I put a little amortization schedule here, and we're going to start with the starting balance. Then we have the added investment of $17,000 every year. I'm also going to assume a growth rate of 8% in the stock market, and this may not happen. The stock market does not always grow at 8%. Historically, it's actually grown at 11%. But for other reasons, that doesn't mean because the stocks go up, the dividends go up by the same percentage. So as prices go up, your dividend yield, the amount of dividends you make on that actually goes down. And that's been the trend for like the past fucking 30, 40 years. So I'm just going to assume the 2% dividend rate holds, and we're not going to have 11%, which is what it historically has been. I'm going to lower it down to 8%. Okay, and again, we can always dick around and argue about assumptions, but I'm trying to account for some reasonable amount of growth that would occur. And I'm making the optimistic assumption that the dividend yield doesn't go down any more than it already has. If you want, you can look up the dividend yield, S&P 500 dividend yield. It's a very interesting chart, but you can look that up later. All right, so 20, 21, and we take you start with a balance of 0. We add every year 17,213. We're not worrying about inflation. We're just keeping this in today's dollars. We have an 8% growth on the previous year's ending balance. We add the added investment, the 8% growth, and we have an ending balance at each year. The dividend yield is applied to that previous balance. We add that to the new balance next year, so we're accounting for both dividend growth and capital gains growth, the growth in the value of the stocks. So this continues on, and where do we go? By the age of 38, almost 20 years later, you can do it. By the age of 38, your dividend income is estimated to be $14,273. And that jumps the hurdle in today's living standards to live a minimalist lifestyle. So it is feasible. Using the assumptions that I use in running this scenario, it is possible that after 20 years of religious minimalism and religious investing, and assuming nothing bad, drastic, or crazy happens to the economy, and that dividend yields don't go down, yeah, it's mathematically possible to do that at the age of 38. I don't know if they're saying, oh yeah, you can retire then at the age of 38, or they're saying, oh yeah, you can retire at 25. Again, I have to read the articles in the books to see their math. But by that time, you'd have $644,000 in an IRA or your retirement funds. And a 2% dividend yield on that is $14,000. And then you could say, okay, I'm done working, in which case your capital would no longer grow. You just simply keep living off of the dividends. But if you were to keep it up, by the time you're 53, you could be making about $55,000 a year in dividend yield. You have $2.5 million in the account. Now, the problem I have with this are these three assumptions right here. Okay, this assumes a lot of things that may not be feasible or possible. This assumes you're making the median wage of an American at the age of 20. Well, that just doesn't happen. You're going to start off making bupkis, and then you probably make more than the median wage as you get older. So you may now that's the average person. And the average person in the United States is a fucking moron. People who read extreme early retirement, sorry, what was the name of it? I want to get it right. Early Retirement Extreme and Mr. Money Mustache, you guys are not average. You are above average. So I would think, if you got a little bit of hustle, you're 20 years old and you want to go and work 2 jobs, or you say, okay, I'm going to get a trade or something. I think that's totally feasible for people who tune into these channels. Because frankly, we're just smarter and harder working. We're not leftist liberal dipshits like, I want to major in English, poetry, child psychology studies. They go $200,000 in debt and they bitch and whine about the banks getting bailed out when they want the exact same thing. So we're not talking these dipshits. But would this work for the average person? No. The assumption number one, I don't think it would, because the average person is a fucking idiot. However, Early Retirement Extremes audience and Mr. Money Mustache's audiences, those two audiences, would work for them, because I'm going to grant them more intelligence and a harder work ethic. 2, the stock market keeps growing at 8%. That's one you can't rely on. I mean, I even think the millennials remember the financial crisis. Do you, kids? Remember how your parents couldn't afford you the newest Xbox game? All right, that is going to assume that grows at 8%, and there's no guarantee of that. Then the biggest assumption that I have a problem with is that dividend yields keep up. And not to delve into a boring economics lesson, but ever since 1978, which is when the retirement program started, the 401k retirement program started, the baby boomers, and now more recently Gen X, has just been throwing trillions of dollars into the stock market, and this has driven prices up. It has not driven profits or dividends up. I mean, they've increased, but if you look at the dividend yield or the price to earnings ratio, what you see is stock prices going up and dividends and profits not keeping up. So and now you throw in quantitative easing and all these corporations borrowing at 0.5% to buy back their shares, regardless of how much money the company makes or not. You have an effective traditional stock market bubble, and I don't think dividend yields are going to keep up like that. So, I mean, there's many different assumptions and all that, but if we run just a regular, straight, run-of-the-mill, you're a subscriber to this channel, Early Retirement Extreme, or Mr. Money Mustache, it is doable for us, but not until you're about my age, middle age or so, not until you're approaching 40. And this assumes you got hustle and the discipline to basically live as a minimalist for 20 years, which you can do, which I did. And the older you get, then exponential rates do help you make actually quite a comfortable lifestyle. But there's just too many variables and things that can go wrong that I would not recommend this for your average person. Your average person, like I said, is an idiot. And not only the idiots, they piss away money, they spend more than they make, they buy shiny baubles, they go get car loans. So this is really only for the select few, not for everyone else. But on top of all that, let's be very clear though, minimalism, regardless of the numbers we run or whose book you read or whose figures you want to assume, minimalism is the future of retirement. Minimalism is a philosophy every real man and woman should be pursuing, because the most valuable things in life are not things. And once you can get rid of it, once you find out that it's love, your friends, social interactions, experiences, adventure, which may take a little bit of money, you don't need that car, you don't need the bubbles, you don't need fucking designer things and clothes. You don't need any of that shit. And once you get rid of your need, or you think you have this need, like once you could go into a mall and not buy anything or feel the urge to buy anything even though you have the money, that's how you succeed at retirement. You don't need the money. You don't have to go and suck some corporate cocksucker's dick. You don't have to pay the government fucking 50% of your income because you made it past a certain income tax bracket to go support the fucking parasites of the left. You minimalize. You make sure your expenses are low. And then, fine, if you're lucky, all of a sudden you make a ton of freaking money, that's cool. That's nice to have the money, but you know what? You don't need it. You don't fret over it. You don't worry about it. And maybe you pay off your debts a little bit faster. Maybe you help out some of your kids' friends go to college or whatever else. But money is no longer the issue. You want to, it's like a drug. You do not want to become dependent upon money. You want to minimalize it to the extreme. And that's a good philosophy no matter whose site you subscribe to or who you read or what numbers and assumptions we make. So yeah, great question. Thank you very much for it. I would love to hear from Mr. Money Mustache and Early Retirement Extreme. That would be great. Love to see what kind of figures you guys are running. And if you have any other questions, remember, go to assholeconsulting.com. You can go to the YouTube here. It's youtube.Aaron_Clary. We have backup sites. You can go to Dailymotion / Aaron Clary, and also Asshole Consulting has a Facebook page. You can go and friend on that where I'll upload some of the cooler videos. I gotta do that. I haven't done that in a bit. That's just in case the googs decide, oh, he's saying things we don't agree with. So, best of luck to all of you. Toodles.